The US government is raining down on Nvidia. They've decided to back a major case against the company, and people are now scared this could pull the entire company down. Is this the end of Nvidia? Or will they be able to pull out of these barrage of issues? This is a very important video for Nvidia fans. Let's get right into it. Disclaimer. A really big news just broke the tech industry. Nvidia is facing serious charges, and this time, both the DOJ and SEC are backing those who are leading the lawsuit. This doesn't happen that often, and Nvidia is in really rough waters because of this. What's actually happened with the case? Well, hear me out. Nvidia is now facing a class action lawsuit, and the US government is supporting it. The lawsuit claims that Nvidia misled investors about how much of its sales came from cryptocurrency miners. This support from such major authorities puts Nvidia under more pressure as the case moves forward, which could also quicken the decision against Nvidia if it does come to that. In a brief filed on October 2nd, U.S. Solicitor General Elizabeth Prelogar and SEC Senior Attorney Theodore Wyman urged the Supreme Court to allow the case to continue. They argued that the investors bringing the case had presented enough evidence to warrant further action. What's interesting is that this lawsuit was originally dismissed by a district court, but it is now making a comeback. Nvidia had asked the Supreme Court to stop this from happening, but the DOJ and SEC are now standing against that request. The lawsuit centers around Nvidia's alleged misrepresentation of over $1 billion in sales of its GPUs to crypto miners. Because of the US government's push on this case, Nvidia might have had their business of selling GPUs to crypto miners cut down, and this could hurt Nvidia's potential sales down the road. So what did the case say against CEO Jensen Huang? The plaintiffs say that Nvidia's CEO misled investors about just how much of the company's revenue was tied to the cryptocurrency boom. Nvidia denies all these claims, stating that the lawsuit relies on false expert opinions and inaccurate information about the company. However, the DOJ and SEC disagree. They argue that the investors' claims are backed by former Nvidia executives and even a report from the Bank of Canada, which estimates that Nvidia may have understated its crypto-related sales by $1.35 billion. This case has gained additional support from various legal experts, institutional investors, and anti-fraud groups. All of these parties stress the importance of transparency and honesty in financial reporting, especially in industries like cryptocurrency that are rapidly evolving. As the Supreme Court reviews the case, the pressure on Nvidia continues to mount. The outcome could have significant consequences for both the company and the broader tech industry. And with a case that is being backed by the US government like this, Nvidia's several business arms could also be negatively affected. This could put a potential restriction on Nvidia's movement and growth in the future. But the string of bad luck for Nvidia doesn't end here. On top of this terrifying news, it also seems like huge investors and institutions are now forgetting about them. Dividend and China-focused funds made a strong comeback, leaving Nvidia trailing behind. Just this third quarter, utilities stocks, often considered the least exciting, outperformed Nvidia. And this seems crazy because Nvidia is so hyped lately. The average utilities stock fund surged by over 17%, while Nvidia's stock saw a slight decline of 2%. This shift marks a significant turnaround after Nvidia's massive rise in the first two quarters. While Nvidia stalled, the utilities select sector, which had lagged earlier in the year, jumped by over 30%. This surge puts the fund on track for its best year in over a decade. So what pushed these types of funds to rise? The key factor behind this reversal was interest rates. Utilities rely heavily on dividends, so they are particularly sensitive to changes in rates. The rise of income-oriented funds could attract investors away from Nvidia, which thrives on the excitement of future growth but offers no dividend. For Nvidia, this could have several negative effects. With investors shifting towards stable, dividend-paying stocks, Nvidia may face reduced demand for its shares. Lower demand could put pressure on its stock price, especially after its huge gains earlier in the year. This slowdown could also dampen enthusiasm for Nvidia's growth prospects in AI and chip technology. If interest rates remain favorable to dividend stocks, Nvidia's momentum might slow, affecting its long-term outlook. So, is Nvidia now going to go down? Well, not quite. Despite all these scary updates about the stock, their company is actually doing really well. Not just in the sense that the products they're producing are good, but also the performance of their stocks in the market. As shared by a user on X, Nvidia has become one of the most active stocks in terms of options volume. This means more investors are trading Nvidia options than any other stock, showing that there's high interest in the company. Keep in mind that Nvidia is facing charges, but still, people are buying shares. When options trading volume is this strong, it often signals big expectations for the stock's future. Investors might be betting on Nvidia's stock to rise or fall, but the sheer activity alone is a positive sign. This kind of attention can be good for Nvidia. Here are a few reasons why. First, it can increase the stock's liquidity, making it easier for people to buy and sell shares quickly. High trading volume can also create more visibility for the company, attracting new investors who want to take part in the action. Another positive outcome is that this activity could indicate confidence in Nvidia's future, especially in AI and chip development. As investors place their bets through options, they're essentially betting on Nvidia's future growth or recovery. If Nvidia delivers strong performance in upcoming earnings or product developments, this increased interest could push the stock higher. The high options volume shows that many are watching Nvidia closely, expecting big moves ahead. To add to this, there's also a huge economic news that could push Nvidia even higher. The U.S. non-farm payrolls for September came in at over 250,000. This is much higher than the previous year's 142,000. And if you look at the estimated 150,000 for this year, you'll realize how good this actually is. So, why is this good news for Nvidia? Well, for one, this jump in job numbers signals a stronger U.S. economy, which could benefit them. A stronger job market means more people are employed, leading to increased consumer spending. This could boost demand for products that rely on Nvidia's chips, like gaming systems, personal computers, and tech gadgets. When people have more disposable income, they tend to spend more on technology, which would help drive Nvidia's sales. A healthy job market also means businesses are growing. Companies may invest more in advanced technology, including Nvidia's AI and data processing solutions. This could lead to more partnerships and contracts for Nvidia, especially in sectors like healthcare, automotive, and cloud computing, where their technology is essential. The positive payroll report reflects a resilient economy, which gives Nvidia the opportunity to capitalize on continued growth. As the economy strengthens, so do Nvidia's chances of increasing sales and expanding its market reach. This could also be possible because of the strength of Nvidia's stock. As you may already know, Nvidia insiders have sold more than $1.8 billion worth of shares, and even more sales are expected soon. But this doesn't faze Nvidia. This is because despite this significant selling, Nvidia's stock hasn't dropped like you might expect. In fact, it has stayed relatively strong. What's surprising is how the market has absorbed these sales without causing a major price decline. The $1.8 billion in insider sales only represents about 0.06% of Nvidia's total market cap. While the number seems large, it's actually a very small portion of the company's overall value. This shows that Nvidia is a massive company with a lot of liquidity. The market can handle insider sales without much disruption. Instead of being a bad sign, these sales can actually reflect a healthy, active market for Nvidia's stock. Insider selling isn't always a negative. It could simply mean that executives are taking profits or diversifying their investments. The fact that the stock hasn't dropped significantly shows that investors still have confidence in Nvidia's long-term prospects. This resilience suggests Nvidia's position in the market remains strong, even with large insider trades happening. But what do you think about this? Let us hear your thoughts in the comments. If you are curious to find more, then make sure to click on one of the videos you see on the screen. And with that, we come to the end of this video. If you enjoyed the video, please like this video, and don't forget to leave a comment in the comment section. This really helps me with the YouTube algorithm. Also, please share this video with as many people as possible. Let's get this news out there.